Welcome back, it's Seth here. So something actually really interesting happened in the past couple weeks. I received a call from my friend while I was working, and he informed me that Canada's getting a sovereign wealth fund. And I thought he might have misheard something because usually the countries that do get a wealth fund are running surpluses and not deficits. But when I did take a look into this, I stood corrected as Canada is getting a sovereign wealth fund.
So today, we're proud to announce a new pillar of our plan, the Canada Strong Fund, Canada's first national sovereign wealth fund.
So in this video, I'll be diving into the limited details that we do have about this future fund that Canada's developing and what this means for every Canadian. However, before I do dive deeper into this video, please hit the like button down below, and if you haven't subscribed, please subscribe to help grow our channel. Now that you hit the like button, let's dive in. So to start off, what even is a sovereign wealth fund? Think of it this way. Imagine a country makes a lot of money, either from oil, taxes, or exports, whatever it may be. Instead of spending all that money that they're making, they decide to invest it for the future. And I'm not talking about a little bit of money. I'm talking about millions, billions, and trillions of dollars, which gets put into a fund for the future. Now, the key idea is that the government has their own investment portfolio. Like you and I, who might invest in stocks or real estate, the government pretty much does the exact same. They'll go invest in stocks, real estate, infrastructures like airports, highways, energy products, and new private companies and startups. And the goal is quite simple. It's to grow the money over time so the country gets richer and richer. One of the best examples of this is Norway. In the 1990s, Norway created something called the Government Pension Fund. This was done by Norway to invest their surplus of money that they were making from their gas and oil revenue. And by doing this, they were trying to prevent higher than normal inflation and protect the economy from price volatility. And get this, by Norway consistently investing into this fund, they've been able to grow this fund over $2.2 trillion. All Norway had to do was consistently invest the surplus money they were making from gas and oil, and now they pretty much own a bunch of companies around the whole world. Now, Canada is trying to do the same thing, or at least attempting to try to do the same thing. So here are the details that we currently have for the Sovereign Wealth Fund that Canada is trying to create. Prime Minister Mark Carney did recently announce that Canada will be getting a sovereign wealth fund called the Canada Strong Fund. The Canadian government will initially inject $25 billion into this fund to get this started. This fund is actually supposed to be strategic and work along with the private sector to invest this fund back into Canada's economy. The goal of this fund is to invest into clean and conventional energy, critical minerals, agriculture, and infrastructure. The returns that are made on these projects will be reinvested into the Canada Strong Fund to grow this fund over time. As the fund grows over time, it will target projects with the highest return so that it has the most benefit for the fund and Canadians. And how this could benefit every single Canadian is that most Canadians will have the option to invest into this fund. The Canadian government is planning to create a retail product where you and I can both go and invest into this fund and get a piece of this return. This will give Canadians a direct stake in the long-term prosperity and help build long-term national wealth. So the main goals of this wealth fund is to boost the Canadian economy, fund large-scale projects that the private sector won't do alone, reduce reliance on foreign capital, especially the US with the current trade talks, and lastly, strengthening the key industries in Canada. So these are all the details that we have about this fund, and here are my opinions on this future fund that Canada's creating. So to start off, my biggest concern is where is this $25 billion initial injection coming from? And I'm not the only one thinking about this. It seems like no one really has an answer.
Judge this, other than to say the government's going to put $25 billion over 3 years in it. And I'm not clear where that money is coming from either. So I have lots of questions, but give me your thoughts.
And I have no answers.
So the thing is, usually most wealth funds are set up when a country is running a surplus after a surplus, like Norway. However, with Canada, well, we've been running a deficit after a deficit. From what I could find, the current speculation is that this initial $25 billion will be coming from a couple different areas. The first speculation is that this initial $25 billion could be coming from the government capital allocation. So this is money from taxes, borrowing, or the budget reallocation. The second speculation is that it's going to come from asset recycling. So the government is selling some assets and reinvesting that money into the fund. These assets could be any crown corporations, such as airports, highways, utilities, or any really property that's owned by the government. The third speculation is that it's going to be co-investments with pension funds and private capital. So this could be pension funds, private equity firms, or institutional investors that are looking to invest into this fund. And the last speculation is that it's possibly debt-backed investment structures. So essentially, the Canadian government's going to go and borrow more money. This could be in form of a loan or issuing bonds. So if I had to use my logical reasoning, I would assume the Canadian government's going to tap into all of these areas to get to the first $25 billion. And what really makes me nervous is that if we go borrow more money when we already have a pretty large debt, I don't know how great of an idea this is, but we'll see with time. And here, the Canadian government's pretty much saying that we're betting on ourselves. Also, building on this momentum of betting on yourself, the Canadian government is looking to use this fund to only fund Canadian projects and Canadian companies. The Canadian government will invest on a commercial basis alongside with the private sector and aim to target market rate returns. So the model of this fund is pretty much we're going to use the national capital to grow the Canadian economy. So the Canadian government will most likely use this fund to target projects like energy grids, pipelines and transmission lines, critical minerals and new mining projects, AI data centers and telecom infrastructure. Also looking to grow agriculture and advanced manufacturing in Canada. This Canadian Wealth Fund is actually very different from what Norway has. What Norway does is that it will take the profits that it earns from oil and gas and invest it into global companies and not directly into Norwegian projects. And their main reasoning is that they don't want to overheat Norway's own economy and diversify themselves away from oil. So what this means is that Norway actually owns a small piece in almost every company around the world, such as Apple, Microsoft, Nestle, different banks, bonds from different governments, and so on. My worry here is that Canada just investing into the Canadian economy can cause a concentration risk. If the Canadian economy struggles, the taxes in Canada are always under pressure, and now this fund will be directly impacted and may become under pressure. And this is exactly why Norway does the complete opposite of what Canada's planning to do. Also, the Canadian government's going to allow Canadians to actually invest into this fund directly. And this is pretty much letting Canadians spearhead most of the national projects. The concept here sounds really appealing at first, especially when you hear it's government-backed investments. However, if it's not a guaranteed investment, there's always risk. So this investment from an everyday Canadian could carry market risk. And this investment is fully dependent on the Canadian economy due to the lack of diversity. And the thing is, most Canadians are pretty tied to Canada in general already. As most Canadians work in Canada, their homes are in Canada, they use the Canadian banking system, use Canadian dollars, and already rely on the Canadian economy on a day-to-day basis. Now, if Canadians are taking their savings and investing directly into this fund, well, now you're adding more exposure to the Canadian economy, which you already have enough of. Also, there's potential for liquidity risk. If the wealth fund is being used to fund projects like infrastructure or industrial assets, these assets are not that easy to sell. So if you want to withdraw your money, there may be some restrictions. There could be limited withdrawal windows. There could be penalties on early withdrawals. There could be delayed redemption, and the pricing may not update like an ETF that you're used to seeing on your phone. Moreover, there could also be political risk. The fund is tied to national priorities. So there is a risk that some of the funds may be used for political reasons and not really for financial reasons. Lastly, we don't have all the details. So there's a chance that retail investors may face higher risk. This could be because pension funds, private equity firms, and large institutional investors may invest alongside with the government, so they may negotiate a better deal for them. So they may negotiate better protection, preferred returns, or a lower risk position. The average Canadian may not be getting the same deals, so they may face higher risk when investing into this fund. Overall, I do see the appeal for this fund, and I do think it may benefit the Canadian economy. However, I would not compare this fund to Norway. Norway's fund is strategically built to diversify and grow the wealth over time into the global markets, where this is going to be purely for the Canadian economy and only for the Canadian economy. Now, if you ask me, do I think this fund will be as successful as Norway's fund? Well, only time will tell. The strategy is completely different. However, the goal is pretty much the same. So for now, I'd keep this wealth fund at the back of your mind and wait until we get more details on what type of returns and what type of risk we may actually be facing. So I hope you guys enjoyed this video. I wanted to update you guys on the Canadian economy and what the Canadian government is planning to do. If you guys did enjoy this video, please remember to stay tuned for future videos. And until next time, remember to keep investing.